The Home Depot is the largest home improvement retailer in the United States. The home improvement industry is a massive, roughly $1 trillion industry when measured by annual spending in the United States alone. So it's understandable that investors are interested in the Home Depot stock. But what's a fair price to pay for this home improvement giant? That's the question I'm going to answer in this video, conducting a discounted cash flow analysis valuation on Home Depot stock. Let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. All right, so I know there's a lot of numbers on the screen. I'm going to go through them one at a time with you, so don't get overwhelmed. Let's get started on the top left-hand corner here, free cash flow for 2024. So these numbers from 2024 to 2029, shaded in the green, are numbers that Wall Street has forecasted for this company for free cash flow over these next 5 years. And so according to the Wall Street analysts that are following the Home Depot, they think its free cash flow will grow from $17.95 billion in 2024 all the way up to $21.19 billion in 2029. That's good for a growth rate of 7.7% CAGR, compound annual growth rate annually. Between 2029 and 2034, I forecast the company's free cash flow will grow at a 6.5% rate. So slowing down from the 7.7% rate of increase between 2024 and 2029. From 2035 onward, I will forecast the company's free cash flow grows at a 5% rate between 2035 and infinity. But rather than compute each of those cash flows individually from 2035 to infinity, we can use the terminal value formula, which collects all of those cash flows and brings them all back to this point in time in 2034. That terminal value is $616 billion for Home Depot. So when we add up all of these free cash flows, Home Depot is expected to earn between 2024 and infinity throughout the life of the business. The value of those free cash flows, the present value, is $368 billion. And when I say present value, I mean that I'm discounting those cash flows in the future because money in the future is worth less to us than money today. So we need to discount those dollars, those future dollars, at an appropriate rate to account for the time value of money, which includes risk. And so that discount rate I'm applying is 9.95% weighted average cost of capital. I'm giving them a cost of debt of 7.5%, a capital asset pricing model cost of equity of 10.56%. The company's beta is 1.01 according to Yahoo Finance. The risk-free rate is 4.5%, and the market risk premium I used is 6%. Home Depot's market cap is $411 billion, and since they have total debt of $63 billion, I gave them a target capital structure of 20% debt and 80% equity. So applying all of those numbers into the weighted average cost of capital brought me to the discount rate of 9.95%. So we're not done yet. We have to take the value of operations and add the company's cash balance of $1.5 billion and subtract the debt of $63 billion, which brings us to a value of equity of $306 billion for Home Depot. But we want to know the price per share. And so we divide by the number of shares outstanding of 993 million, which I also got from Yahoo Finance. And that brings us to an intrinsic value per share of $309 for Home Depot stock. Now, if we compare that with the current market price, it's trading for $417 as of this morning. So if you compare my intrinsic value of 309 with the market price of 417, we come to the conclusion to believe that Home Depot stock is overvalued, slightly overvalued. And that doesn't mean that the stock price is going to come down. That just means that my calculation for Home Depot stock is below the current market price. And if I was interested in buying Home Depot stock, which I am, I think it's a great company. I think it has very strong competitive advantages that it's demonstrated over the previous decade. I think the management team did a phenomenal job during these unprecedented last 5 years. The company is one of the relatively few companies that I can say did a good job both entering into the pandemic and coming out of the pandemic. It managed its inventory well, it managed the company well in those unprecedented circumstances. It's not easy to experience a surge in revenue like Home Depot did during the pandemic, an unexpected surge in revenue. No one expected that home improvement spending would explode during the pandemic, and it caught many off guard, but Home Depot was able to adapt quickly. And then coming out of the pandemic, Home Depot also adapted well, and the business has done relatively well, even though it surged during the pandemic. And so the competitive advantage here is that the type of products that it sells is very difficult for exclusive online retailers like Amazon to encroach upon, right? It'll be difficult for Amazon to sell lumber and deliver it to your home at a cost-effective way, the way that Home Depot can. And so those advantages it's built up over decades has protected it well against online retailers like Amazon. And the business is well managed and well run. So I would want to own this stock. And the price I would want to buy it is around $300 a share. I don't know if I'll ever get that opportunity. Right now it's at $417 per share. A lot of investors feel the way I do about Home Depot. The company is a desirable company to own. And so the valuation rarely reaches levels where you feel like, or I feel like it's a bargain. But I have it on my watch list. And if it should fall to this price, if there should be some kind of market correction, a unreasonable correction, sometimes, markets panic and prices crash more than they should. I can scoop up Home Depot shares, and now I have a price target. I have a price that I know I'm targeting, that if it should reach that price, I'll be inclined to buy shares of this stock. But for now, it's a bit out of my price range to purchase. Still, I don't only look at this when I'm evaluating a company, right? I highlighted several other factors that I've researched about Home Depot stock. Valuation is less than half of my consideration when deciding whether or not to buy a stock. And I hope you do more due diligence than just looking at this and making a decision from this. This one video alone is not enough information to make a decision on Home Depot stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.